Hello guys, and welcome once again to my YouTube channel. So in this particular video, I wanted to share with you something that is very interesting. One of the strategies that we have been using over time, and I believe it's one of the best strategies that you'll ever encounter here on YouTube or wherever, because of how much effective it is, and also how little to no manipulation it experiences on the market, since it is an institutional strategy, which the institutions themselves, they're the ones that are using it as well. So without wasting much time, let me just jump into the strategy. So I'm just going to give it's going to be a series. So it's going to be an album of videos basically, whereby I'll be showing you so many ways in which the strategy works, so many ways in which uh, the strategy can be effectively used to maximize on any market that you can ever choose. So currently for this particular section, I'm going to talk about GBPUSD. So GBPUSD, the most important thing when it comes to the strategy is understanding structure. That's all you need to understand, understanding structure. So understanding structure, we need to look to the left, looking to the left here, looking to the immediate left here, you can actually, we can all see that this was an adjustment or a market structure shift. Those that don't know what an adjustment is, what a market structure shift is, there's a link in the description there. It will take you to my Telegram groups, my WhatsApp groups, where most of those discussions will do them there in those groups. So after that, we had this break of structure. So after breaking structure, you will realize that during that entire time, GBPSD was simply going up, high highs, high highs, high lows, high highs, high lows, high highs, something like that. So eventually they came now and broke the higher low. The higher low was this one. That was the previous higher low. They came and broke it. Breaking the higher low like that, we call it a change of character. That being a change of character, it means if we're going up like this, we're now coming down. So coming down, we don't just come down like continue coming down like this. After changing the character like this, we collect all forms of liquidity before we go down like that. Same thing that we have push, pull back, continuation. All of that, right? So you realize that the same thing here that is happening on a daily perspective. If I go to the weekly, it's the same thing also that is happening on the weekly as well. It's the same thing that is happening on the weekly. On the weekly, you can actually see that we are in bearish order flow here. We are in bearish order flow on the weekly. We broke structure here. So you realize that on the weekly, on the weekly time frame, this this was our lower low, that's our lower high, right? This one is our lower low, right? So this movement that was just going up, the purpose of that going up that was happening on GBPUSD was simply to pull back, to facilitate and create a lower high. Once they create a lower high, they'll come down all the way and take out the previous low and establish a new low. So this is actually their major target to the downside. So even if they come and fail to break there, that will still be a lot of money coming to the downside. So you actually see even my anticipation for what I'm even anticipating for GBPUSD, even for this last week of or for these last weeks of December, as well as the entire January, February going there. So there where they shifted order flow, because here they were going up, 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 up. There where they changed character and shifted order flow, that's our new lower high, because it's lower than that higher high that is up there. You see, even where they created their lower high, that it's actually a significant zone of supply or an order block there. So right now, all you now need is to go down to the daily. Once you go down to the daily, the most important thing as well, after a change of character like this, the same thing that they did, whereby they will pull back into a significant zone. So in this case, right there, my supply was mitigated. My fair value gap was touched as well. Here, my supply was mitigated. Then here, I can see another supply that is unmitigated there. So most probably, they can prefer that unmitigated supply, because they know that by the time they touch that extreme unmitigated supply, they would have collected a lot of liquidity along the way. You will realize that here we have equal highs. Those equal highs, that's simply liquidity that the institutions love to come and collect. So most retail traders, without understanding, they look at that as a resistance level. Once they look at that as a resistance level, the minute the market touches that resistance level, the retail traders are busy selling there, and as they are busy selling there, their stop losses are above there. Then the institutions, what they will do, they will wipe out all the stop losses. Then after the wiping out the stop losses, the retail traders are going to buy, thinking that the market is going to go up. Then after wiping out their stop loss, they wipe again their stop losses again to the downside, since they would have bought and put their stop loss below, thinking that is now a support. So that's how manipulation is happening each and every single day, each and every single time. So what I wanted to show you here was is this progression, how you could have maximized all the way from here. This is basically what I wanted to show you. So after marking my zone like that, after identifying that this is a change of character, all of that and all of that, right? So the next thing now, all I know that the next thing that is about to follow, that is almost about to follow, is a pullback into a significant zone there. So all I do now is scale down to a lower time frame, the 4 hour time frame. 4 hour time frame. If I can't see any structure here on the 4 hour, I go to the 1 hour, because all we now need is a clear structure to show us where the change is going to happen, where the change of order flow is going to happen. Once we see where the change of order flow is going to happen, then there where the change of order flow happens, that's where we know that that's our starting point of the pullback. That's how we know that the pullback has actually begun. So that's how you actually know that a pullback has begun, when you see such things like that happening. So just right here, let's look at what happened. Right here, we induced here. That was an inducement, making this a lower low. Then that is our lower high there. Then this one is a breakout structure, as you can see. So this entire time, the market was still pushing to the downside, right? As you can see, the market was still pushing to the downside. So this is my lower high. That's my lower low, like this. So the minute they come and take out that lower high, if they come and take out this lower high, it means that's now a change of character. That change of character, it simply means we're now going to the upside. What we're doing here, coming to the downside, they were coming to the downside all the way here, all the way from the top here. They were coming to the downside, all downside, that downside, following in respective bearish order flow. So once you see them changing here, it means they now have a new leg there, because here, according to them now, that's a high, that's a swing high, that will be a swing high, that will be a swing low, higher low. Then once they change here, it means this is now their lower low. Once they now have a lower low, they'll pull back in bullish order flow. Then once they change again that bullish order flow, that's now their lower high. The same thing that we are seeing on the dailies, the same thing that you're also seeing on the other time frames as well. That's the fractality of the markets. That's what we mean when you say the markets are fractal. What happens on a higher time frame is the same thing that you also see happening on a lower time frame. The only difference is the amount of time it takes to happen on that lower time frame. So right here, that's my lower high. So after seeing my lower high like that, once I see a change of character there, once I see a change of character there, it means we are now shooting all the way to the upside. So right here, you can see that this is an untapped demand. Untapped demand. The purpose why do they leave these untapped demands is so that they come and collect all this liquidity. This double bottom, it's a liquidity. This equal lows or that double bottom, that's liquidity basically, that the institutions, they generate all these equal lows. This is all liquidity that the institutions generate on the market in order for right. So immediately now they've changed character now. This change of character means we're now going up. But as we're now going, we don't. It doesn't mean just it doesn't mean that you just buy up there because we change character. No, you wait for them to do the same thing that they did, the same thing that they did externally. You wait for them to do it also in this particular zone, in that particular level. The same liquidity that they collected at an external level, it's also the same way they are going to collect liquidity at a minor level. This is also liquidity as well. This is also liquidity. This is trend line liquidity. This is equal lows liquidity. That is the change of character, as you can see. So after the change of character, you first thing that you must identify your liquidity zones, identify where your liquidity is. Once you identify where your liquidity is simply, these are zones where most retail traders are bound to buy. So most retail traders, they draw this as a support. Once you draw this as a support as a retail trader, they know what you're thinking, right? They know that by the time the market gets there, you are busy buying. As you are buying, your stop loss is below. As it is below, they are going to wipe you out. Once they wipe you out, you think that the market is going down. Once you think the market is going down, they'll wipe you out again. You put your stop loss above. So you discover that they wipe you out twice. That's how they are doing it over and over, each and every single day, each and every single week, each and every single month, each and every single year. That's how they are manipulating retail traders. So personally, after identifying that I have liquidity there, that's my extreme liquidity zone. I just look for an institutional zone below. An institutional zone can be in form of a demand zone, an order block, or a fair value gap. All of those are institutional zones. So after doing this is trend line liquidity. You see, they'll wipe it out. They'll wipe out trend line liquidity first. After they wipe out trend line liquidity first, then they'll come to the equal lows liquidity there. Equal lows liquidity there. They wiped out trend line liquidity, as you can see. Then, right there on this support, retail traders are going to be initiated to buy there. They are going to initiate you to buy. Retail traders are going to be initiated to buy. And notice this is a short-term target that I have here. But my major target now, let me zoom out. When you zoom out like this, don't forget where we drew our major level, because the same thing here, this is liquidity, that's an institutional zone. That is liquidity, that is an institutional zone. Meaning I can hold this buy all the way to the upside like this. Because the same thing that is happening on an external level is the same thing that is also happening on an internal level. It's the same thing over and over and over and over and over and over and over again. So that's my maximum level of TP up there. This one is a short-term TP, right? So you'll see by the time they come there to the support there, they'll give some form of rejection, then to initiate the retail traders to buy, right? To initiate the retail traders to buy, they'll give some form of movement there. Yeah, you see? Watch this. Watch this. Watch this. Watch this. So what did they do? They did reject. And retail traders are busy. They are excited. They are jumping around. Excited. Their stop losses are just below here. The zone. And institutions are aware of that. That's mathematics that is happening each and every single time. They come, they wipe you out. They wiped them out. They wipe them out again. Because notice they haven't touched their zone. They haven't touched their institutional zone here. Still there. Don't think that they've forgotten to touch it. No. No, 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 no. They don't forget. They don't forget. They don't forget. They don't forget to touch their zones. They don't forget to touch their zones. It is only you who will think that they've forgotten, yet they haven't forgotten anything. So that's their zone there. That's still their zone. You see, they came again, they wiped them out. After wiping them out now, that is when. So notice here, after being wiped out on the buys, after retail traders are wiped out on the buys here, they are going to sell below here, thinking that is now a resistance, and they'll put stop loss above here. They'll be wiped again. This is the manipulation that is happening each and every single day, and retail traders, they're not aware of it. They're not aware of it. If you meet a retail trader who will tell you that institutional trading doesn't exist, that person they don't know what they're saying. They don't even know what they're talking about. So right there would have been your entry. This is your short-term target. This is your short-term target. You're just holding now. You're just holding, letting the market do its work, letting the market do its job. As it is pulling back to these other demands, that's just an opportunity for you to scale in. As it pulls back to these demands, those are opportunities to scale in. But basically, you are just holding, 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 holding. This is how you maximize. This is how you maximize. You're simply holding. First target is there. First target is there. Notice all the way to the first target. Notice that my major target, that I'm actually anticipating, it's the same thing. The same way I did here is the same way I'm doing it here at an external level, whereby they change character. You identify liquidity zone. Once you identify liquidity zone, just identify a supply zone or an order block just above that liquidity zone. This is a liquidity zone, so I'm identifying there is an untapped supply zone up there. So that is a major target for the long run, right? So you can even hold all the way from here to there. So along the way here, there's also another way of scaling in, because there's also another way of scaling in. You're just following this minor structure. You're not just following that minor structure. Go back to the 1 hour. You can even go as far as the 15-minute, right? So they've broken structure. After they break structure, the same thing, we anticipate them to give us a pullback. I can see a zone here. I can see also a zone here. Once you have a zone there, once they tap into a zone, all you need is a 15-minute time frame confirmation. Once you get that 15-minute time frame confirmation, then you enter your trade. Once you enter your trade, you just hold all the way to the upside. So after breaking structure, they gave you a pullback again. And these pullbacks, they happen into specific zones. They don't just pull back anywhere. they pull back into specific zones. They don't just pull back anywhere. So right here, after pulling back like that, remember what I said, that once they tap into a zone, all you now need is a 15-minute confirmation time frame, a 15-minute time frame confirmation. For example, here, that was an inducement. After that inducement, there was a change of character, meaning that zone is a valid zone. Definitely, that zone is a valid zone. That's a valid zone for entering that opportunity. Here, you could have entered here. There's a fair value gap here. There was also this one that was tapped as well, this demand. And as it was going, it was also, so after tapping these zones, it also came again and tapped this other one. Those were zones where you were supposed to be entering your buys. You could have bought here, bought there, bought there, bought there as well. So after buying like that, all we now need is the market to push up to our level there. Push up to our TP. Push up to our TP there. Push up to our TP. Push up to our TP. TP is up there. You see? TP was hit. TP was hit. Second TP was hit. First TP was here. TP was hit. Second TP was hit. So after the second TP was hit, the same thing that we did here, whereby we draw a significant zone. I can see here we have a significant demand. There, you can even mark this block as well. Then after marking, you just wait for the market to give you that pull back into that zone, right? Once it pulls back, then you enter your next. So you realize that the market kept on going and going and going and going. Kept on going and going and going and going. This was a simple break of structure there. Then here, that's not yet a break of structure as yet. That's not really a break of structure as yet. So you see that it kept on going and going and going. So how you maximize is by simply following order flow. Once you follow order flow like that, once you follow order flow like this, you realize that you begin to realize that most people, as they will be jumping in and out of trades, you will just be relaxed. The reason why you are relaxed is one. The reason why you are so relaxed will be one, the fact that you know what you're doing, so that they broke structure again. After breaking that structure, so you see they kept on going. Kept on going. Here they tapped into this zone. Tapping there, you just go to 15-minute, go get confirmation, then you jump into the buy there. Because they are tapping into, they are not just reversing on anyway. They are just, they have specific levels where they are pulling back onto. They are not just moving randomly. They are not just moving randomly. They are moving in a specific order that is so predictable. So once you understand the order in which they move in, you'll be at a very good advantage. So that entire time is the market will be moving like that. You're simply holding. You're simply holding your trades. You're simply holding your buys because the ultimate target hasn't been reached at the top there, right? The ultimate target at the top hasn't been reached. So if the ultimate target is at the top hasn't been reached, it means there is no reason for you to. So there, that's a target there. That's a target there. That's a target there. This is a zone. Right. That's a zone. Once the tape is zone, all you need is 15-minute lower time frame confirmation. Lower time frame confirmation will just tell you that that zone indeed is holding. So in this case, they came, wiped out. After wiping out the zone, came back above. They had not yet given the lower time frame confirmation. If you go to a lower time frame, you can actually see. Let me go to a lower time frame so that you see that they had not given that confirmation to jump in as yet. They had not given that confirmation to jump in as yet. Go to 30-minute or even 15-minute. You'll see that they had not yet given that go ahead to say, now it's time to strike. Now it's time to strike. So they had not yet given that. So here, To the left here, you can see that that was an adjustment. During this entire time, they were actually selling. So that pullback, even this pullback coming to the downside, I even explained how you could have even entered the pullback from there after breaking structure here. After coming to break here, you wait for another pullback, then, or you wait for another adjustment like this. After the adjustment happens, the market pulled back into a level that was a sell again, broke structure there, came again, broke structure here. After breaking this structure, it did this adjustment, right? So you see, they were still coming down. They were still bearish the entire time. They were still bearish the entire time. So even here, after they came back there to that level, they were still respecting this zone because that was our lower high. So it means you could have even sold there, targeting this leg right here, like this. You see? So they haven't given that go ahead to jump into buys, but the market is still pushing all the way up. Don't forget that. The market is still pushing all the way to the upside. So here they came, TP was hit. After TP was hit, they went all the way to change character. That change of character up there, this one, that's a go ahead to jump in now. That's a go ahead to jump in. That's a go ahead to jump in there. That's a go ahead to jump in. Target is up there. So after changing that, they came all the way and broke structure to the upside. So after breaking that structure, the same way the same thing that they've been doing, whereby, because remember our ultimate target, notice how much you would have maximized just by holding from here. This was 30 October, which means entire month up until 30 November you're holding. Now it's almost 20 December. You're almost getting to 2 months just holding one particular position. Although along the way, all you're doing is identifying opportunities of entering, proper entries of maximizing on, and scaling in, right? That's what you'll be doing along the way. But basically, that was the main trade ever since October. That was the main trade. So even the institutions themselves, they even understand that that was their main trade. If ever they are to go and record or check the record of books in their books, they can actually show you that ever since the 30th of October, even up to the 30th of December, we'll be buying GBPUSD. Will be buying. You will find that in their books because they know their strategy, they know their formula, and they just follow it. So right there is my next set of. Right there is where my next set of buys is. Right here. So right there is where my next set of buys are going to be. The market is still pushing all the way up, still pushing to the upside up until they reach that extreme level of supply, extreme order block, which is an institutional level. Once they reach there, once they reach that institutional level, that's how you know that they are about to now change the order flow from bullish to bearish. So this entire time, the order flow is still bullish. That's why I'm still anticipating very good buys, very good, beautiful buys to the upside on GBPUSD. So it's a buy that we can even hold all the way, maybe to the end of the year. I think so, because it's only we have I can say we have at least 1 week, one trading week left. So basically, it's a buy that will hold up until we enter 2024. So this is what has been happening on GPUSD ever since 30 October up until today, which is 20 December. So you realize that most of you during that entire time, if we were to trace, if we were to track your trading journal, to trace the opportunities that you were taking on GBPUSD ever since that time that I spoke about, which is ever since 30 October up until today, you will realize that most of you've been taking some crazy setups. So right here, break of structure, this leg is one leg. This is one leg. So I'm anticipating this is an inducement. That being an inducement, it will qualify that as a higher high, right? So they will wipe out the inducement, come and wipe out the inducement. Once they wipe out the inducement, then they tap into my zone, then they go up. If they go up, your first you can target this as your first target, which though I'm anticipating it to be broken. Once they break there, then this is our final ultimate target for that entry that I entered all the way to the downside. Once we tap into that zone, anticipate we actually anticipate order flow to now shift from bullish to bearish. The same thing they did here, whereby they shifted from bearish order flow to bullish. It's the same thing that we're anticipating on the upside. It's the same similar thing. Similar thing. So on the upside, it will be something like this. I just inverted my scale so that you see what will happen. So on the upside, it will be something like this, like this, like this. They come, they change character, they leave a zone, touch, tap a zone, come down. So you just sell from there. That's what they would do if ever it's happening on the upside. So that's how you trade. That's how you trade. Not if you listen to me carefully, you realize that this entry that I took from down here, I never spoke about trend lines or anything or any sort of that, because those are just ways of trend lines. They try to define structure, but they're not the best way of defining structure. They're not the best way of defining structure in the sense that they are manipulated. They are manipulated, number one. Number two, they have a lot of retail stop losses that are pegged uh, under them or above them, whichever way they would, depending on the way they would have been drawn. So they have a lot of of manipulation that always follows trend lines. So it's something that most people that are using trend lines, they don't want to hear that. 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 I can draw trend lines, yes, but they're not my entire they're not my entire bias or my entire criteria for entering a trade. If I'm entering a trade, you'll find so many other reasons beyond the trend line that you might see on that particular entry. So basically, this is how you trade. This is the I can say my last trade for the year 2023. I can say it can be this buy on GBP USD. It's a buy that I've been waiting for, and it can be my last good trade for this year. Very beautiful trade, very beautiful trade, swing trade actually. So this is a trade that I also want you to take as you're listening to me and paying attention. Make sure that you also take this trade along with me. Make sure you have joined our free Telegram group. The link is in my bio. Make sure you have joined our free WhatsApp group. The link is in my bio as well. Make sure you have joined our free Discord group. The link is in my bio as well, where such information like this is being exposed, is being revealed to the majority of people that are part of those groups, so that each and every single one realizes financial freedom through the financial market. So guys, thank you for watching. See you in the next video. Remember, it's going to be a series of videos that I'm going to do in the next 10 days, starting from the day. It's going to be a series of videos that are going to help you actually see. Your eyes will be opened through these videos. Your eyes on your perspective on the market will totally change. So thank you guys. Thank you. See you in the next video. Make sure you've liked and subscribed, and see you on the next video.